The week is coming to an end, and the euro versus U.S. dollar seems to be on its way to closing above the 50% midpoint of the move down from the July high to the July low, or August 1st low. I'll talk about the technicals that are driving this currency pair as we head into the new trading week in this video, so let's get started. I mentioned the 50% retracement, and that's of this move down from this July high to the low price that we saw. I guess this is on August 1st. On that day, you see this blue line right here. This blue line represents the 100-day moving average. And the market dipped below that moving average line, but only so briefly, and that started this rally to the upside. That rally to the upside took the price up through the 38.2% retracement and above this swing area right through here. Then we consolidated in trading on Monday. We fell on Tuesday to the high of this swing area right through here, finding support buyers just when we needed them. By the way, this goes back in time through here, so it has more support there before moving back to the upside and running into the 200-hour moving average on Wednesday. On Wednesday, the low price did find support near that level right through here before moving higher and extending up to the high price for the week on Thursday's trade. In that process, we moved above the 50% retracement, moved above the 61.8% retracement, but we did stall ahead of this swing area up through here, which included this low right here and maybe this highs right here. It's not all that great, but anyway, the price then rotated back to the downside. What I like about the rotation to the downside was look where the price stalled. The stall on the downside came right at the 50% retracement, and that level is going to be a key level to worry about or to target on the downside next week's trading. If the price were able to get below that level, it would by definition also get below the rising 100-hour moving average. That's a blue line in this chart. And that would tilt the bias more to the downside after the failed break higher. Conversely, if we're able to stay above this area right here, stay above the 100, stay above the 50% retracement, then the buyers can force the price higher still, and extend above the high price that we saw earlier this week. Get above this level right here, and then start to look toward this high price right through here, near the 117.87 level, and maybe even retrace all the July move to the downside, heading up to 118.289. So this area is going to be key next week. We are seeing higher highs and lower highs going into the weekend. So the market is still a bit unsure of which way it wants to tilt up here, but it'll be determined probably Monday or Tuesday of next week. We'll see how it all goes. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.